Good evening, traders. This is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Thursday, August 14th, 2014. Here's a look at the watch list. The averages were, as you can see, higher on the day. ES was up 14 handles. The winner today was the NASDAQ side of the market. That was up a full 1%, or 42 handles on the day. The Dow was up an even 100, and the Russell kind of picked up and shook off some of its relative weakness and put in decent performance today. The dollar was definitely moving around, and as a result, bonds were quite a bit higher today. Oil futures were a bit lower, and gold didn't do too much, even though they tried to take it higher. It was really being held back by dollar strength today. Internally, the market was pretty good all day. We're plus 1,500 issues on the New York side and plus about 950 on NASDAQ. One curious thing is the trend closed at 1.38, which will put another, somewhat high number into our 10-day average. Let's start off with the NQ futures, which were the better performer today. Definitely got some distance above the 10 EMA. As you see, we got up just to the gap window here, but basically just stopped there. So tomorrow, keep this gap window open on your chart. So use today's high versus this previous settlement up here at about 39.70 for that ultimate gap fill. We're going to be probably looking at that for the end of the week as a big area. Support's going to be at the 6/8 level, where the 10 EMA comes into play with that 6/8 level, and if that yields, then we'll be talking about the 50-period DMA. One thing to note here is the MACD never went negative and is starting to try to turn back up again here. I misspoke. I didn't mean didn't go negative. It did cross negatively. It didn't penetrate the zero line where you get that burst of downward momentum. ES side, somewhat similar but less strong than the NQ side. We're above the 10 EMA, but still being held below the 50. Didn't get up to interact with the gap window. So tomorrow that gap window is going to be resistance. Call that 1953.5, and then the ultimate resistance on the day is going to be that gap window close at 1964.70. Key support's going to be the low of this three-day range right here at 1922.5. Here's a look at the Russell Index, which has been the weakest link, back above the 10 EMA. It's still technically still short-term negative until we take out this high here from the cross back above it from this candle number 4. If we do that, 1156.25 is going to be the resistance area. Support's going to be 1125. TLT, which is the surrogate for the long bond, was just barely an outside day. It was almost an inside day. Did get up here. Keep in mind that if we do continue much higher, we're going to be getting pretty deep into the exhaustion run count, doing 9, 10, 11, 12, 13 for the exhaustion peak, which could come 7/8 or 8/8. Oil futures on the day were down about a quarter, so we're still boxed up in this multi-day range. It's been more than a week now. So when we do ultimately resolve this range, this should have some punch to it. So the 3/8 level, about 98.5 versus about 96.75 is the range. When we break out of that, we should get a pretty decent move. Gold is really just basically trading against this 4/8 level at 13.1250. So nothing really to be learned here until we break out of this range. Close essentially right at that EMA. I'm sorry, that 4/8 level. So that's going to be the level to watch. Here's a look at the NDX S&P ratio chart. So when this ratio is on the rise, or this graph is on the rise, that's going to show you relative strength in the NASDAQ. We did break out of this little top that we were grinding in, starting to see some leadership again from the NASDAQ side of the market. So this is always welcome. Here's a look at the same chart in the weekly time frame. You can see that we're starting to get some distance here. We're starting to get some relative strength in the overall NDX. So if this persists, we could definitely have a bid under the market, or at least some kind of a buffer for the near term, as long as this relative outperformance of the NDX One thing that's not working in favor of the NDX right now is the relative weakness in the semiconductors, the stocks. You see that we've rolled over from this peak right now. So what we really need to see is the social media stocks and the other internet stocks pick up the slack here. So if the SOX continues to be weak, we need to see Facebook, certainly Apple, Cisco, all the other heavyweights hold their own against the overall NDX to maintain some strength. Here's a look at the major sectors ranked from best to worst. The BTK Nasdaq sector was the top gun. Defense index was up there. The XAL is also taking a bounce and hanging in there pretty well. XAU was the source of funds and pretty weak. Telecom, which was strong the other day, was weaker today. Kind of a little bit of a rotation. XLY was lagging the market, which is a little bit of a concern, as was the OSX. And the transports really didn't do too much today, but they were certainly a much better performer than the oils. Taking a look at the sectors, here's a look at the BTK. The BTK did break out and make a new high close on this move. Key takeaway here is that we're 13 bars up now as of today's close. So this is going to mark the end of this impulse. Probably not a big exhaustion warning with necessarily a reversal to follow imminently. That's because there's not a lot of range here. Here's your 1, here's your 13. So this whole exhaustion run is basically lateral and flat. But key thing is we're in the overbought territory, and we do have a 13 exhaustion in place. Transports, 3 days up in the seeker startup phase. Trying to get back up here, maybe to take a shot at this static trend line at 6/8. That's the green line here. Key support's going to be this 4/8 level, but this group really needs to get going back to the upside and assert itself. If this doesn't cooperate, the market at this late stage of this bull run is going to be doomed. Same can be said about the oil services. This needs to get going too, and this is really still pretty sloppy. Still short-term negative below the 10 EMA. I'm just using the 200 period moving average here for support. This is actually a great example of how the 200 period moving average comes into play and can be gamed. You can see we came down here from about 302 down to the 200 DMA, about 277, 278. Got in that area and rebounded right back up. Now the 200 DMA is a little bit closer relative to it, and it's starting to struggle here above this. So if this area yields, we're going to have a real problem for the overall broad market. And finally, here's the SOX. SOX turning back up positively. Short-term positive now, being above the 10 EMA and taking out this previous high. MACD is potentially crossing back to the upside. If we do continue to the upside, 625 at 4/8 is going to be key area, and the 50-period moving average is just overhead. If it can continue to the upside, obviously the static trend line is going to be the ultimate target, and there's going to be some pretty good support here at the prior low and also this 2/8 level at 593. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.